It's All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Today we've got a very special guest coming back on the show. By now he doesn't need much introduction. He is the market sniper, the crypto sniper, and last but not least, the reset sniper, Mr. Francis Hunt. Thank you very much for coming back on.
Delighted to be back on. Thanks for having me.
Yeah, the pleasure is all ours, and there's so much going on at the moment. It's really crucial to have somebody with as much experience and information as yourself on this show. So maybe you can shed some light about what you see coming for the markets over the next sort of 3 to 6 months.
I'm going to show you a chart that I really love. And initially at first bite, it looks a long departure from crypto, and I'll explain why it's probably very, very relevant. It's one that literally hasn't changed. All these annotations that were put on by me a very, very long time ago. Our community is very committed to this trade. It's the USD Korean won. And why something like that for many people that are not FX traders, that started with crypto? Why are you dragging me someplace I don't want to be? What's the relevance? So I'll get straight to it. This is the most exciting macro setup that is indicating to me that there's an exceedingly high probability, as we've continued to say multiple times, that you're going to have an absolute melt up in dollar strength against this currency. Now, I want to just highlight also that this currency isn't the Turkish lira. You're talking about the country that brings you Samsung TVs, Samsung devices, Kia, Hyundai, that probably by all measures of IQ is deemed the most intelligent nation by average IQ. They exceed anyone else who claims to be higher. They exceed the Chinese, the Japanese, the Israelis, who love to think how smart they are. But this is a melt up of a first world currency, and a very similar example is the USD JPY, which is the Japanese. We are watching an Asian FX crisis against the dollar. That's why I say this is a little bit beyond just dollar dominance. It is a massive part of it, dollar dominance. But the Asian specific element is going to somehow manage to do worse than our favorite whipping boy, the euro, although the euro is going to absolutely be falling as well. So we're seeing that, as I've described many times before, the smaller emerging rest of the world currencies, unless they've got a very strong commodity base, they are getting some protection from that, actually. So the likes of, for example, Canada, Australia, New Zealand, and even to some degree a place like where I am right now, I'm in Plettenberg Bay, South Africa, they may get some protection on account of things. We are actually in the inverse metaverse phase, which is completely about things, not about virtual reality, NFTs, all this stuff. And there will be a time for all that. It's quite clear to us that our Bolshevik technocratic communists definitely intend us to be owning nothing and happy in a virtual universe, no doubt, with happy pills coming out of our ears. But we are first going to go back to actual things that you need. And I've referred a couple of times to Maslow's hierarchy of needs, but without blustering people with theoretical models that many people don't know. In simple terms, it's a pyramid where you have shelter, security, food. Often those basic needs are at the lower end. And then much higher up the pyramid, you get, status, self-actualization, toys and things, and then being remembered post-mortem, all of these things, Gandhi, that would be a highly self-actualized figure that did a lot of great things for many people, allegedly. And so we all start just needing to make sure we have a meal and a place to sleep where we won't have our heads crushed in during the night by a predator of some form. What we're going back to right now is focusing on energy, keeping warm, and food. It's not about your latest Game Boy station where you can, go into a virtual reality and speak with some mate that's in another part of the world where you shoot bad monsters. And in essence, and I know the metaverse is a lot more than that. I'm kind of being a bit facetious in that presentation, but what we're actually seeing is this inverse effect where commodities, energies, and macro around things are becoming very important. And we're also seeing the bifurcation and many of the other things, and the dollar is going to defend itself. How does it defend itself against the potential of a central bank digital currency release? In the name name of fighting inflation, which they were deeply slow to implement, I think through intent. Most people think through incompetence. In other words, it's my assessment that we are seeing an engineered takedown of the current world order globally in a certain firing sequence, which I feel I have in the right order, but I could be proved wrong very quickly. And that the subsequent new machine is waiting in the wings. And this is what those that were the exponential everything Ethereum to 20K guys forgot. To get the new system, you also have to kill the old system. And killing the old system is highly deflationary because money is borrowed into existence. So we're actually watching debt lose value by interest rates going up by the Fed. And actually, they are forcing themselves to pay higher levels of interest on the money they've borrowed, don't forget. So this in itself is also very, very interesting. So nothing that is utterly proliferated should have great value. You know, I used the example of pink crogs made in China where there's a billion pairs. These are not things you should be paying hundreds of thousands of dollars for. But if you're buying one unique item which is very rare and has true rarity and scarcity in it, then yes, you pay a lot more. As I'd say, the Bugatti Veyrons or whatever, they aren't made in the hundreds of millions. So going back to this, what's it all about? Well, the dollar is defending itself. It's a geopolitical weapon, the dollar. It's like the military industrial complex, but instead of dropping physical bombs, it does damage in a different way. I was also watching Perkins' interview with, I think it was Grant Williams, the guy that was involved with Real Vision early, and he was the Economic Hitman book that basically set out planting the poison seed in all of the rest of the world of getting them on dollar-based debt. And this further makes them vulnerable to an extreme period of dollar dominance in strength. Added to which, you have a higher interest rate associated with that. So your currency, Banana Republic with banana currency, banana peel currency, now has borrowed in dollars. The rate to pay back is going up on a floating rate in most instances, in an increasing way. So your Fed is your master because they up the cost of your debt. And at the same time, you have banana peel currency losing an immense amount of value relative to the dollar. So that forces said government to either admit defeat, which nobody wants to do, that throws you out of power. So they print more of banana peel currency to exchange it at governing rates to service that increased level of debt. But after they start printing and it becomes clearer, they accelerate the decline of that currency, and the dollar rate to the banana peel currency starts going even further down. And this is kind of the slope that Turkish lira is very much on. And you reach a certain amount of interest rate policy, we're going much beyond. And there is, while Erdogan is probably eccentric and has gone with his own take on economic policy, there is one part of what he says that does have a grain of truth to it in its insanity, is that beyond, say, 20%, adding rates much more, making them 25 or 30, doesn't make really the Turkish lira more attractive. You're not going to go, Turkey's up their interest rates from 20 to 25. Can't wait to send some of my dollars that are currently appreciating against every currency in the world. I say most, and particularly against emerging highly indebted nations such as Turkey. Can't wait to send my dollars and convert them into lira to pick up that extra 5%, are you? Even if he moves it to 30, it's going to kill the economy. It's going to be a self-feeding loop. It's quite clear that once you're falling down a slope, no amount of interest rates being paid is going to actually reverse that trend. There's a scarcity of dollars offshore. Now, for an American hearing that, who knows all the skullduggery and mismanagement, they just go, how can you be, you're such a dollar bull? Well, I'm not bullish fundamentally the dollar. I am understanding what the technicals are showing me about how everything goes down first.
You understand
in the rate.
You understand
the dollar is the
well.
stick, that's right, that breaks all the other Ming vases before being set alight finally. I kind of, in Mark Yusko's discussion, I spoke of, all the ships are burning, but they're burning in a firing order. The biggest tinderbox of a ship is actually the dollar, and it's the last one, but the fire still has to be allowed to come down. And the dollar started the fire on the smallest rest of the world currencies, the most vulnerable ones, and they come through. So the economic hitman has essentially put in a poison pill. Perkins and his cohorts, and he talks of the jackals that assassinated, quite clearly, Ecuadorian and Panamanian presidents that wanted to do right by their people, which was why I don't really think he's fully come clean. And I think he knew it for a lot longer than what he admits, that he knew what he was doing wasn't so great for the other countries. But he continued for a while, and he claims shortly after he left, those two presidents were bumped off. Now, him and many others that threw up, and he admitted they didn't, other economists didn't pump up the numbers that people would get if they borrowed money and had a new power station put in, all these Halliburton type hustles that they were having people do. He admitted that he didn't care. His numbers were always acceptable, and he always said your country will be a lot better. So basically he was a bullshitting salesman that helped leverage people into a poison pill that you're now, as you see dollar strength playing out, seeing the damage that is doing on rest of world that have dollar-based debt, appreciating dollar, and in an interest rate environment where it's also requiring a greater payment at the same coincidental moment that their currency is losing ground against that currency. So it is, this is how they always planned to synchronize a takedown when they were ready. So it's a bit like, we also had another anniversary. It's a bit like World Trade 7. If you watch the slow-mo of that one tweet that shows the explosions and all the different lights lighting up and the crease in the two buildings at the top of the building in the two places, and then it folds into its own thing. You actually, to do a synchronized, very controlled, on your sink, your plunger moment, for an economy, you have to go around and plant all the explosives at all the structurally key points that are absolutely devastating to a structure that, when simultaneously triggered, will lead to a controlled demolition very shortly within the moment that you sink the plunger. And it's plunger boy moment coming for us, because this entire setup, you are watching the financial equivalent of a controlled demolition of an economic system, where the economic hitman, Perkins and his pals that wanted to chase fast women and have big bucks and run in consultants and have chief economic titles, but were actually working for dark state and CIA agents and told exactly what they were supposed to do, befriend, get guests, get intros, and get hooked on debt. You are essentially a cocaine dealer. You're selling a line of coke for a short-term high that gets the guy into power and then makes him your slave, so that he has to revert back to you to get what he needs. And then you take him down at any time when you to give him denial of service, and he goes into cold turkey. And in essence, that's another metaphor for where we are at. So right now you're watching a country that's currency we called on Real Vision and have for many years said will trade through 2,366, our target. And we've got essentially, this is the most beautiful charting setup, but the same applies for the USD JPY. The same applies for our reasons for why the Hong Kong dollar peg will be allowed to fail at some point. And I think those points are coming soon, because we're calling the plunger boy moment of the controlled demolition. So the knock-on effects is that you're not going to leave something out there. All the columns are going to get blown to ensure the building is taken down globally, because the building is actually the economic system of the entire world. So every single one gets taken down. So calling this culmination of financial contagion, it has to coincide and look like domino events, much like those controlled explosions that you saw with the flashes and the lights and the squidges in that building quite shortly after each other. And they'll say, well, the one happened because of that one and that happened because of that one. No, it happened because you planned it that way. You put all those things there a long time ago, and you're now triggering them off through the weapon that you've set up. So that's our financial system. Now, when money dies and debt is losing value and rates are spiking and the dollar is spiking, when money dies, the little physically held dollars that you do have go up in buying power during that period because there's a rush, because everybody is exiting the other currencies that are losing value. Also, debt is losing value. So all the debt holders are getting out of debt and trying to get into cash. So they're trying to get either cash holdings or anything that will survive. Some of the, and the amazing thing is, in this deflationary time, when you have to pay a rent, when you have to pay this, liquidations will be rampant, even in assets that are undervalued now and will go up in a massive amount. So the paper price for gold and silver will go down again, abruptly and brutally, in my opinion, and technically it looks poor. So as someone who is considering that, who very much buys into the JP Morgan statement that gold is money and everything else is currency, aka fiat, even that's going down. So imagine what that does to crypto. And Arthur Hayes, yeah, and Arthur Hayes has made similar comments. You know, when you know, everybody, I love to use this analogy because I scuba dive, I'm an adventure diver. You get guys that admit to peeing in their wetsuits, and you get liars. Essentially, when you hit that cold water on a morning dive, it doesn't matter if you took a slash in the loo before. It doesn't matter what happened. That cold, sharp water coming through that neoprene wetsuit the first time, when you've just got out of bed and you barely had a breakfast and it's 5:30 in the morning and you're getting your first dive of the day, there's a Pavlovian response by your physicality, no matter how strong you are. And this is the same thing for good quality assets. If you're being tapped on the shoulder and you've got a feed, and there's only a black market supply because they've destroyed supply chain and it's 20x what it normally is in a supermarket that's no longer supplied, or your rent has spiked because the landlord's interest rates on his mortgage have spiked, and as a result, everybody's ratcheting everything up simultaneously in a crazy Zimbabwefication moment, only on a global scale. The point is, you pee in your wetsuits. The equivalent of peeing in your wetsuit is you sell your Bitcoin. You sell it for anything you get, because even, you know, getting $5,000 for it means you get a meal for a week, a hot meal for a week, even though you know that that's not a true, or you feel that that's not a true. Nobody knows anything really during these moments. You feel that you're going to regret that. You have to do it to get through today. Suddenly the visibility of your future disappears and there's fog right up to your hand, and you just have to get through the next few inches and make sure you're not being hit by a freight train. And when and that just means getting through the next minutes, hours, and days, not where will I be in 3 years' time. And in essence, everybody's going to face this if they do the controlled demolition of the global economic system in the manner that's been described. And I do wish I had that World Trade Center, because you can actually hear all the explosions and the little lights, and they will come synchronistically quite after each other. And then you see the takedown of the building. In actual fact, even though it's an old building, in the same way our financial system is an old financial system, it's actually been quite robust. Despite all the toxicity, the excessive leverage, you have to actively break something. And when you get in a demolition team, or when you try clear a site, you realize how hard it is to break down concrete walls and shatter floors and everything. It's physically draining. You really do need explosives. And these guys have done that in terms of what they are. And the Perkins is one small segment of a salesman backed by some threatening jackals. It's basically, you know, silver or lead, you know, take the silver or get the lead type deals when you're in charge of one of these countries. And the South Americas have battled under the duress of these jackals and the economic hitmen.
Can I just interrupt you for a sec there, Francis? Because you've just, what you've said there is so much to unpack. You spoke about the poison pill. You spoke about the explosives that are in the building ready to collapse it. That is the dollar system. This is how
the debt-based dollar system.
Absolutely. I mean, there's lots to unpack in what you just said. Hopefully people have been able to follow that, because there's lots and lots of information there. I've said this for a long time. It's one reason I got into crypto, and I think they very smartly came up with Bitcoin in 2008 to get people like me on board. You know, money or fiat is a complete con. We have been hoodwinked 100% into giving up everything. We are financial slaves in every single way. Some people are just a little bit less, have a little bit less chores to do than others because they've worked their way up. It is, when you talk about the building collapsing, this is because the dollar's going to go up. Essentially, that's going to cause, all these little explosions to take place in other markets. And then the big plunger, the dollar imploding because of the debt failure, nobody's going to want debt, is going to bring the whole house of cards down. And then what do we go into? You also spoke, talking about our outlook for markets, about the fact that people are going to sell out of necessity. Going back to Laszlo's hierarchy, people are going to want, I said this the other day, I said, this is something that you need to take away with you. Do not be in the asset class, or don't be in an asset that people are going to be willing to sell to get liquidity. That is as black and white as I think it needs to be over the next 6, 12, who knows how long this goes on for. You don't want to be in something people are willing to sell to get what they need. That is crypto, the most liquid high beta. I wouldn't say the most liquid actually, but certainly one of the most high betas. Then your stocks, you name it, gold and silver included, certainly on the paper price.
I think unfortunately we face a despair moment for many people in crypto. But there will be bottomless pockets that will be picking up. So if Bitcoin is to be a survivor of this, it's going to have to comply fully with the surveillance finance agenda. So forget all that freedom story about it. That's why right now I almost see more guarantee of Ethereum surviving on account of how married up it is, how they're going to run the property-based blockchain crypto. It's no doubt in my mind that getting the goyim off the land and removing us from the land, from being property rights. This is the main Bolshevik strand: remove property rights. And the Ethereum blockchain property connection is without doubt, with that, you will be made to declare your value. This Vitalik is with this Zionist Chicago professor ascertained that they will do this self-valuation. But if you deem to have undervalued your property at any point when it comes to paying your taxes on that property, they can buy you out at whatever you state. What a garbage idea. Why are people forced to be sellers? And especially if they're paying their miracle token that they have control of printing up as many as they like, they could pay some ridiculous sum and still buy you out because you don't have the access to create those tokens, and they do. And you can slowly be shaken out. Oh, but you didn't fairly value your property. Now you can be a tenant instead. BlackRock has an apartment for you, a sky pod in some urban mega center, etc., etc. So the Ethereum is going to be a big part of you will own nothing.
Yep.
And the be happy is, of course, your pharmaceutical crowd. So to retain wealth, and by the way, this sounds like hectic doomsday porn. It is, but I'm an absolute going to call a spade and tell you what you need to know. Because if you don't know the full scale of the threat, you can't scale up for the solution. There are real solutions. Get sovereign as far as you can. Get self-reliant as far as you can. I'm going to be looking right now on a hill that has a view of the sea, multiple properties on a big piece of land, beautiful, tree-lined, sea, hills, easy to get a sunny climate, so we can get solar independence, water independence, and actually choose my neighbors, so that when they start the Gestapo rat your neighbor out for not keeping his heating at 19 degrees or 20 degrees more during winter, you're surrounded by a bunch of people that go, F you government. But I want options, and if reset is going the way I think it might, I'd rather be in the southern hemisphere. It's going to be a grim northern hemisphere winter. Boy, oh goddamn boy, is it going to be grim. And I find the winters there grim enough. So the last I need is Max, Boris Johnson, now Liz Truss, World Economic Forum, Prince, now King, World Economic Forum, Minister, now Prime Minister, baying down at me and trying to strip me of my remaining freedoms when I'm trapped in a mud-swept, windy island. That is just pure purgatory. And by the way, I'm English, and I love, I've got plenty of pals and friends there. That's not a knock on you guys. It's a great place to spend the summer and all of that. It's just, I don't want to be part of that. I don't think there's any easy place to escape the World Economic Forum. I think this Cyril Ramaphosa of South Africa is as bought in as any of the others. So I don't think there's nation states. Bringing this all back to crypto is the flight path, and the message that I give hasn't changed. And great leaders stand up in great times. So the opportunity here is there's a mega obstacle course. Are you going to sit in a corner and weep by the test of a multi-millennial plan that is coming to its detonation point? Or are you going to take action, take plans, and get the mental positivity that taking action does? You get, because this is a psyop against you mentally as well. Get exercise, get fit, get sunshine, and you keep your immune system strong and free and able, and you're going to be able to fight off most things. And they've got a lot of hurdles to work through, and they've got a lot of dumb, easy killings they can make before they get to you or I. And that's how you want to think and position. It's going to be that kind of a time. So in that highly contractionary phase where the spontaneous demolition is going on, much like that tweet video of the kinks appearing in the World Trade Center, all the different flashes going quite shortly after, you're going to live through the economic equivalent of, oh my God, the Hong Kong pegs failed. The Korean won's just halved in value to the dollar. Wow, the yen is 250. Oh my God, interest rates, mortgages, bonds, can't pay the house price. Oh dear, quick, do this, blah, 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 blah. Emergency, you're going to have to rent your house, blah, 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 blah. New rules, you're now tenants in your own home. Your banks won't foreclose on you for now, but the asset has been signed over. Da, 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 da. All of this quick responses, much like you're seeing trusts with the energy-based response, none of which cures the problem. No, we will cap prices. Okay, cap prices will then cap supply, or it will damage the corporations that are involved. They'll have to lay off, or they will print money so that the government holds the short on the capped price for everything that goes above, and holds the other side of the trade when it goes above, and becomes further indebted, and therefore further proliferates and devalues the currency. All options are a tax on you. That is how it works. But in the name of a headline, we are stepping in and taking action to prevent your bills. No, you're not. You're going to spread that cost. You're going to limit the energy at a certain level. Eventually, you're going to do load shedding, which they already prepped here for. They already have the generators for. They already have everything because they're used to that. And Britain's going to find that now. Try be in Europe and order a mega generator to keep a restaurant going, and try keep or a big house heated when it drops below zero overnight. Good luck. You're going to have supply chain problems, and you're going to have over demand problems, and you're going to have black market available at 30 times via your local Israeli friend. Those kind of problems, because you're going to be all rushing for the exit after everybody screams fire. And that means there's a scrum down at the exits, and you actually end up getting out much slower than if you formed an orderly line and just popped 1, 2, 3 out the door. But that's what happens in human nature. Lemmings will lemming, and don't be a lemming. And that's literally what I'm here to say. If you think it's tin foil hat stuff, well, you haven't been paying enough attention. This is the real game. There's a real possibility this second half of September of a major event, of 3 or 4 different events, from the Pope pulling money out of European banks into Vatican secured sovereignty orders, from a German minister that I know you're aware of, talking about the 24th. We'll all be saying, I remember where I was. Who's making these kind of things? Who gave him that date? How dare he come out with that without giving up the whole story? What does he really know? What does he think? If he's telling us about a future 9/11 of a financial nature, let's hear about it. Why is he giving us, hey, this is a dodgy date? And at the same time, you have the Shemitah end of cycle, 26th of September. There's a lot of things hanging over you with very ill omen. Most of the risks are to the downside. It's got that smell. And I actually remember, I'm old enough to have remembered 9/11. I remember a certain amount of TV coverage that was coming out, and there was an escalation of funny rattling noises on the BBC and a number of places prior to that event, that I then suddenly afterwards, only much later, thought, I remember that guy showing up and saying this. I remember all of that. That was so weird that all of that was happening. And we're getting that little weirdness moment.
You could, sorry to interrupt you, you could actually see, you've got a great book list that you recommend on your Twitter. And one of the books that you recommended was from a guy called Mark Leibovitz. It's a book about volume. And he actually, I believed, positioned out just in time for 9/11, because he said he could see the financial footprints in regards to people getting out the market prior to that event actually happening. Well, why were those people getting out the market just before that happened? That really, and this is what finance, people don't think finance matters. It's boring, it's this, it's that, or the other. Your entire life is controlled by it. So you better get, up to date with what's going on. Absolutely.
In fact, on that very point, I'll dig a little lower on that one. There was also about 14 or 15 times the volume in puts and calls on airline and military industrial complex. So calls on the military industrial complex and puts on airlines. And eventually they tracked that money to an ex-CIA head that was working in a branded boutique that was owned by Deutsche Bank. New York, name escapes me, but someone in the comments who's a geekhead like me on 9/11 who has the facts will answer it. So there was plenty of pre-financial footprints involving volume, abnormal volume. And can I tell you that that's happening again right now? In fact, there is Sentiment Trader that's worth a follow, and I think it was Alicio was covering him in a YouTube. I just stumbled on it in passing. He sometimes does some interesting things, and fair play to him. I have seen it, and you'll usually bring something of interest there. And he had the Sentiment Trader report, and you've got extreme record put hedging taking place right now.
Yeah.
Right now. Now, I've owned my puts for a long, long time. I took a whole bunch, but I took them with 24, as far into 24 expiries as I could get when they were offering me up to 2.5 years ago. So I was way too early. I could have got more. I've had some time decay, but when you buy really long puts, they don't lose too much on a day-for-day basis. They do the bulk of their losing in the latter stage. It's a bit like paying a mortgage curve. But yeah, anyway, so I'm already over positioned there and have been for too long. It would have been much better if I was putting them on now, but it's nice to see the rest of the crowd coming to me. So we got to be positioned for the downside risk on everything. And for someone watching this as a crypto guy, who thinks, well, you haven't mentioned Bitcoin once or Ethereum merge or any of your localized news, that is like talking about the paint color in a one-bedroom apartment, in a block of apartments, while an earthquake, the macroeconomic system, is going on. In other words, right now, the fact that it's pink or green inside the one-bedroom that you're looking at is a minutiae detail surrounding a very small microcosm of something that could be entirely flattened by much bigger events that are far more down to a Maslow's hierarchy of needs, your survival, engaging. But there are people organizing deck chairs on the Titanic right now by mumbling about that crypto versus this and this merge and that. And you will be swamped by the deflationary selling. That will also be an opportunity for the likes of BlackRock to acquire property, to acquire crypto assets, to acquire equities on the cheap. This is the pump and dump scheme. Remember, the game is they lift the casino table and the entire chip skid to the other side of the table away from you towards them. And this is part of it. And pump and dump is originally a macro financial market scheme that was adopted for crypto by crypto scammers on a micro level. But you are experiencing the biggest macro pump and dump schemes brought to you by central banking Federal Reserve policies, where the bankers have known when money would be made available and when it would be taken off. And if you control when liquidity is pumped and when it's withdrawn, you absolutely know which direction all the major assets that have existed for far longer than any crypto token, including Bitcoin, will go up and down. So the entire liquidity spigot game is not a crypto game. It was adapted at a micro level for people running smaller scams. We are participating in the ultimate pump and dump scheme. You got 7 trillion, that is 1,000 billion, which is a million. It's a million millions. I had to think. It's such a big number to make sure I didn't cock this up. It's a million millions. Just think about that for a minute. And I countless, I won't say the same thing I always say, but if you count it a second, 32 years to count to a billion, 32,000 to count to a trillion, 12 days to count to a million, 12 and a half days. So that is the scale. You had 6 or 7 trillion. I'm a crypto guy. I've been engaged. I've posted some very bullish things previously about crypto. I totally have. But right now, it is actually, as I put in the chart, I'm just looking along the bottom to see how far back I would have to go to pull it up. But right now, it is an underperforming, lagging asset to
in comparison with ARK.
With ARK. That was the chart I made. Now, I did that intentionally because ARK is defunded. They've had record outflows in the last month.
Yep.
It is a defunded, in my opinion, largely failing ETF. Some of those things will grow into stars, but I don't know if she'll still be in charge of the fund when that happens. And I don't know if the too many withdrawals happen, she may not even be able to hold the position. So it might end up part of BlackRock's portfolio at some point rather than hers. Or she'll be resurrected because they want, they want that. And they want to make her a star. There was an immense amount of attention she was getting at one point. But the key point of this is that if that's happening, and let me just show these charts. I go back to screen sharing now that I've found what I wanted to show.
It is all about liquidity. We were looking at the M1 supply, and I don't know why it's taken me till really the start of this year, been in markets probably properly for about 4 years, to go, why haven't I just been watching liquidity? Why haven't I just been watching the money supply? And then basing my investment thesis around that.
You start interested in a single asset class or something that captures your imagination. Bitcoin, freedom, or penny stocks that double and halve every day, like I was when get rich quick, blah 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 blah, looking at the 3-cent shares of the South African news, that traded for 3, then 2, then 1, and wow, 50% of your money, double your money. Wow, we're all in chasing money initially, and you start somewhere. Eventually, if you stay in the game long enough, you want to know what the planet's tectonic plates are doing, and you slow the hell down and you worry about the big macro, which is the flows. And what you're talking about when you say liquidity is the flows. And if I go back to the showing, here's the March 2020 6 trillion. That was your March 20 event. There you can see it. And then that's what the lowest point was, in and around 31, 32, 33 maybe for ARK. And you topped out at 160, which is one of the reasons why I just don't get David Hunter's, you're going to have a melt up someday. I'm like, dude, what part of this melt up did you not see?
Yeah, I know.
Go look at it on the NASDAQ. Go look at it in anything. What part of creating 6 or 7 trillion did you not monitor? What percentage that do you need to go up before you see a melt up? And you're now back down at this, and this is not typical bottoming structure. So this is a blow off in a single candle. If you went an annual candle, for example, this is one massive shooting star with a tall wick and a little red candle body. That's what that data is, and simple candlesticks people can get. And if I just show, going back to the point surrounding the Bitcoin part of this, is that what's actually happened. This is how, and people don't like this saying this, and I do it intentionally, not just to provoke, but to get people to think. For the time period under review right now, Bitcoin is, and we called this as a relative low that we expected a rally and said, don't trust the Judas rally, but that's not the one I'm looking to show you. This is the one I'm looking to show you. We said that actually this is how far it has fallen. And Michael Saylor can bang on about pristine collateral all he goddamn likes. But at the moment, when the 6-7 trillion was made, ARK responded first. ARK got the money first. This is the green line. The leading indicator, ARK is beating Bitcoin. Then this is ARK being gold and Bitcoin being silver. The high beta late responder. First gold must move. Listen to the boss. How humiliating is this as a fall for your new money system and your pristine collateral to be following a failing ETF which has had record outflows? I wonder what the outflows in Bitcoin has been, that it's actually underperforming ARK. Are you asking that question? So you go slow, slow, slow. Then you have the melt up. That's the high beta finally kicking, and you get up there late. It's late on the highs.
Wow.
It's late. It's lagging. It's a lagging proxy. Now, I'm not saying permanently that's the case. I'm saying right now, where you are in the macro game, the 2020 data to today, Bitcoin in every way is behaving as And until it starts showing independent behavior better than that, I'm going to continue to treat it. If you want to behave like a dog, I treat you like a dog. You get a little mat to sleep on, and you sleep in the corner in the kitchen, and you get fed in a bowl on the floor.
Is it just ARK that put in the high prop before Bitcoin, or is this the Nasdaq? Did the Nasdaq,
tech,
for example?
You could have used any tech proxy. I personally chose to highlight this against this because it's topical, and it's a high beta tech share that, relative to Bitcoin, is actually low beta.
Yeah.
So you're talking about a very high beta, highly risky growth tech. She even sold Tesla and went deeper down on the smaller caps, the micro caps, into this metaverse future. So she went flipping shitcoin, the equivalent of shitcoin at the tech store, the tech level. And what you've got here is Bitcoin lagging that. And that should be a humiliation. People are not seeing that as a humiliation. Localized lows coming in. This had already started to make lower lows and lower highs, and was showing the dump was occurring. The hopium and the gusto into Bitcoin, it made a marginally higher high. But now, from this point here at 69,000, boy, has Bitcoin been making up for lost time. Look at that. It's been absolutely catching up. And in actual fact, here, this little rising wedge on ARK that had a small sell-off was a major sell-off here in Bitcoin, which took it to new lows. So now it's the higher beta lagging ARK with bigger overperformance on downside moves. So if I don't think this is a bottom in ARK or tech, how can it be a bottom for Bitcoin? And how can the move in tech that's still to come, with all the risks to the downside, all this liquidity being removed, all these risks to the downside with all the German, the Pope, the everything, the banking system, the rest of the world getting butchered by the economic hitman's poison pill that's now been activated by escalating interest rates on a hyper indebted, debt-based economy in currencies that are collapsing. How does this not cause contagion of currency failure? That's why we get the Korean won doing a halvening, a major currency. Then FX, that's ridiculous. You just don't get that between majors, halvenings. This is crypto language speak. This is so huge. So that's why we get that. How do you think you do holding Bitcoin in this environment for this period? And you've been trained to hodl. It's almost like Richard Hart's training. Hodl is the only way. Hodl, you see, we pump you, we hodl. Well, if you got out at 51 cents on his coin, you would do a lot better than the 3 cents now. And it's the same for Bitcoin.
Do you not feel like the stock market, people have also been trained to hodl like the indexes, the S&P, because
I feel the Robin Hood Brigade have been trained to buy the dip.
Yeah.
BTFD, if you remember that YouTube,
which
overweighs all logic, shut up, buy the effing dip. The guy talking to the girl who asked all the valid questions about the unsustainability of the system. Never mind the Fed put, never mind the Fed put, never mind it's the Fed put. And so it's, and so, until it isn't. And that's how they set the trap. They train you, we're always there for you. And then you lean and you fall backwards and you think they're standing there holding, and you smash your head on the marble floor and you're done. And they said, well, you fell over. You did it to yourself. We were catching other people.
I kind of feel like the stock market's in for a similar thing as well, to be honest.
Oh, it is. But the point I'm showing you here is that it's one of the riskiest, as I described, shitcoin equivalent ETF, is a lower beta leading indicator to Bitcoin. Where does that leave Bitcoin?
Yeah.
And I did this on the YouTube just to make a point. You could have done it with other tech variants, etc., but you are here where you are.
Yeah.
So that is the whole malaise that we find ourselves in, and this is the key point. So you have to survive, make it to the promised land. You've got to. It's like the Berlin Wall. If you get shot crossing, it doesn't matter how good the living is on the other side.
Absolutely.
You've got to, it's a Shawshank Redemption. If you don't crawl through the shit pipe and you haven't got the tools to survive that, and you haven't done the prep that our hero had done in the movie, you don't get to stand in the river and have your Caribbean boat and your freedom.
And we're all going through
side.
The shit pipe. We're going into a really tricky time period. Winter, like you said, I think is going to be brutal. regardless of whether they decide to heroically step in problem action or problem reaction solution and subsidize energy bills. I was speaking to a friend of mine who owns a restaurant, and he was saying they're actually talking in Scotland about subsidizing 50% of the energy bills. Well, what people don't realize with that is that 50% that they aren't subsidizing was well over what they were initially paying to begin with. So it's kind of like a token gesture. So I think you're absolutely 100% spot on in everything that you're saying.
And it will cause shortfalls because the energy people won't be able to operate at those lower prices. So they will provide less, or they get paid by government, which means they're adding more debt and killing your currency even faster. So all these things are accelerants to currency destruction. And all these, we'll help you and we'll do this, are an accelerant. They just pass the cost into food price. Because if they print more pounds to pay the energy companies the other half, what they do is proliferate currency. That means everything goes up. If they print 20% more currency to do that, everything goes up 20% more, but they've capped the energy. So you'll just see it more in your food and everything else. And you've capped it. So the minute you create an artificial market, it just pops up somewhere else. So it's purely, and it's like the debt forgiveness in America on student loans. Well, that just means the taxpayer's paying it. So that means they pay up more dollars because they've got to make the banks whole that lent the money or whomever. The universities are keeping the fees that they got paid. They've already spent them, put them in the endowment and bought BlackRock and Vanguard. You can't take it back from them. So that means the rest of the tax base essentially gets proliferated against, and you get further inflation. Every debt write-off is inflation, because essentially when you write a debt off, it's somebody else's asset that's dying. And that, and I understand that. And then actually the Mark Yusko, he stated that as well and reminded everybody of that. So you've killed an asset. So that means you've collapsed the amount of money in circulation, because money is borrowed into existence on an asset liability basis. It's somebody's assets and it's somebody else's liability. It's a debt-based instrument.
There was an amazing saying from Ludwig von Mises. He says, if you try and seek equality before liberty, you'll end up with neither. Whereas if you try and seek liberty before equality, you're going to come to a way better conclusion at the end of it. And this is what we're talking about, taking from one to give to another in the name of fairness. There's no fairness or liberty in that.
No, this is not looking great. This is terrible technicals. This points to, in my opinion, as we continue to reiterate, downside continuation likely as part of this wholesale. And then that way Bitcoin can explain it away. Well, we never knew the monkeypox, the bank hack, fill in the missing mystery cracker that they've got planned for us for this period. But this is a terrible chart. And this rejection candle, we said, don't trust the rally that was coming. We said a Judas rally. It's got smacked right back down, and that was core inflation. Quick word on that. The core CPI came in much higher. We discussed it just before. Biden has been suppressing energy. It wasn't energy. He's been emptying the strategic fund of fuels. Fuels were down. All fuels were down. But what happens is that the initial energy inflation, a lot of it started in the energy market as a part of the proliferation and the fact that they killed energy investment in COVID by shutting everything down. What they then subsequently did is it starts in energy, but then it goes into all your foods, everything that's delivered, everything else. So then you get food and commodity price inflation, the tractors, everything uses fuel, all that goes up. Then it eventually ends up in labor because the people's rents have gone up, the rates have gone up, the mortgages have gone up, the food's gone up, and the energy's gone up, and their salary's flat. So then it goes into labor salaries. So they now said, well, it was services this time that pushed it up. And as I described to you, inflation has to be killed super small. Once it's a full-grown honey badger, it just goes for your testicles, and you can kick it, you can boot it and throw it away. It just comes running straight back at you. It's wave 2, wave 3, and it's a self-feeding loop. Rather than being a stability mechanism, once you've triggered that process, it goes towards the extreme. It doesn't find balance like a price and a quantity. You know, if you bid up the price, you'll get more of a quantity because profit-seeking individuals will enter the market. It's not a stabilizing profit, it's a destable. You've got to walk the watershed. The minute you lean too far to the left towards inflationary policies, it self-proliferates and you spiral out. And this is where we're at. So you're going to have peak inflation callers. I spend my whole time saying it's not peak inflation, it's not peak rates. and they're going to break the system, and it suits their agenda. So they're going to now look all vigilant for being very late and doing the original proliferate, which caused it all, along with all the QEs and all the other pump and dump schemes that they created, from the dot-com, the great financial crisis, and everything even before that, from savings and loans, long-term capital, etc., etc. But this is the end game. This is the plunger protection. So crypto guys need to be in a safe, preferably dollar-based asset. They've got to be in the right stable coin. In our community, we think that's BUSD. For surviving this, as I have a feeling that Binance has complied very, very strongly with the people. It was beaten badly. Binance has complied with the control structure. He stepped down. He got compliance people in. We see an upside HVF. We see 6.12. Recognize that that's going to be in a Binance token going down. So we're not, understand what I'm saying. This is not an investment time into Binance. It's in a relative overperformance in an all-round shrinking, reducing market. Who's going to lose less? So the point of that is I don't want to own the token, but it probably suggests to me that BUSD, and this is the hunch I gave my community on this, and that's the kind of thing we do, is going to be a stable coin that'll likely survive the crevasse that we're going to fall into and through to the other side. Because it would be ironic for Binance to go from roughly the 3.9s to 6.1% dominance if its own stable coin has failed. It's a gamble, but I think you want to be as close to dollars as possible, have dollars notes. Gold and paper prices will crash. If you've got gold notes and you're in BUSD, buy some gold and silver at the extreme dips. It's going to be like the Bitcoin at the base, at the $4,000 level of COVID, peak COVID. Only I think this could be a whole bunch bigger. There will be a more sustained problem. Then there will be everybody's reaction, and then they're going to come with their solution. You need to survive the problem and the reaction and make sure that whatever you have will still be compliant to the solution of surveillance finance that you know they will want. And I think BUSD will be it. But I could be wrong, and they could kill all stable coins, and Binance token just generally does okay and does better than the others, goes down a little less and bounces a little harder. So it's not foolproof. But I would just think some stable coins have got one or two stable coins probably survive if they're in a highly compliant to control structure environment, which I think Binance might do. So the rest having cash, and it's still worth buying gold and silver and taking the crash. Some of it, if you haven't already got. Cryptos, you're going to have a dip buying opportunity you never thought you'd have.
I believe so as well. I absolutely believe so as well. Francis, it's been amazing having you back on the show. We've covered so much. So much is new to people out there. This is a crypto eccentric channel, but one reason that we love having you on is because you bring the full picture, which is what people need right now. It's been amazing having you on, Francis. We'll leave all your links to where people can find you in the description. It's been an absolute pleasure. Thank you very much.
Absolutely. Come to themarketsniper.com, book a call. It costs nothing to talk. And we are truly getting people together that will, in some instances, physically stay alongside each other and are preparing for much more. And if we're wrong, hey, we're prepared. It didn't hurt. And we've been psychologically in a much better place for it as well. Bye for now, and thanks for having me on.
Thank you very much.